In this video, we're going to talk about how to use price action rules to help us understand how market works and where are the high probability setups to enter. We're looking at S&P 500 and mini futures. The structure today is resembling some consolidation. We have uptrend working higher, break, push to new extreme. So following the trend line rule is telling us that the uptrend played out. Reversal, break, push to new extreme. We have double bottom, but this is basically very close to be considered new extreme tested. If the EMA is going to hold, you can still expect one additional push down to test technical new low. If you're going to break above the EMA, it makes sense right now to understand that the market is considering this double bottom as new extreme tested. So market is pushing higher. We have a new low here, first entry short, failure. Now we have a failed second entry short that is also mini second entry long. We have a failed second entry short and also mini second entry long using the counting technique, because from these lows, first attempt to sell, failed, second attempt to sell, failed, new high, first entry go long, pull back, second attempt to go long. Now, you can already see that my signal bar is a little bit different. When I was watching this live, I reloaded my data now and it changed a little bit. For whatever reason, I was struggling today with having good signal bars because I was reloading a lot. I was restarting the NinjaTrader and signal bars were kind of off. So we're going to talk about this later on in the video. But now I have second entry long that is with the bad signal bar. I can't really take it. And because market keeps working higher, moves in price action, they have to be proportionate, which means this tiny channel cannot take into consideration this entire push down. And that's a sign I have to draw a wider channel like this. But I have potential overshoot because initially I'm going to draw a channel like this, connecting this swing at the top. And I have some overshoot. I can make it wider, but you know, it's hard when you're watching this live. And you have to be generally careful. If you think there's overshoot, it's better to play it safe. It's better to miss a trade than to have unnecessarily losing trade. We have a second entry long here, new high, first entry long, second entry long. The signal bar is of course terrible. I cannot go long here. Watching this live, I had much better bar, but I still skipped it due to overshoot. There was textbook second entry long locally, but due to overshoot, I still skipped it. And market keeps going higher, breaking new high. Can I think about selling? I cannot. EMA held. This structure was too bullish. We didn't even make it to the low today. So there is empty room here, some slight bullish bias. You definitely need to see something below EMA. You can't just pick a top even though it worked. And market keeps working higher and keeps working higher. So this is nice structure push up. So what I'm going to do, I'm going to measure the first leg. Trying to project where the target for prices is. One leg break, second leg. And I also have to draw a wider channel. Why do I have to draw a wider channel? Well, because the market consistently keeps trading higher. There's too many bars, tiny pullbacks. It doesn't act as a breaking new high because after breaking new high, you're expecting some correction or reversal. None of this is happening, so I have to draw some wider uptrend. I would like to see second entry long to like a pullback at the EMA. Market keeps going higher. We keep going higher, so you can see structure is still bullish. Okay, I have to redraw. Short-term downtrend working lower. Bunch of matching highs, triple top, new high, first entry long. We're below EMA, so can I go long? Below EMA. No break, no nothing. Market keeps going lower. And once again, when I was watching this live, I had a break, push to new high. You didn't have new high technically. You had double top. Actually, you had 4 attempts to test the new high. So once I saw break, push to new high, this is where once I see market retracing like this, I thought, okay, since uptrend played out, I'm going to draw a wider channel. It's not easy to arrive to the conclusion watching this chart right here because there is no break, but I feel like this is some data error. There are bars missing. Now that I reloaded my data, there is no break in new high, but watching this live, you will break, push to new high, so you're switching bias now to the bearish bias. Okay, market is correcting. We have a new low, first entry short, pullback, second entry short, one leg up, break, second leg up, and you have a second entry short at the EMA while the downtrend is in play. This is a great hypothesis setup, great signal bar. At 2 key entry point, basically, you can see, you can even cut the corner a little bit and have a nice trend line and the exponential moving average, second entry short, 2 small legs to the EMA. Market keeps working, lower high is too far down, basically can't reset, new low, I can't take it. Okay, once again, you're right into these lows. I have to remain patient. Market is correcting. Push to new extreme and the downtrend played out. So downtrend played out, so I'm going to pause, looking to go short. Lower high is not enough for me to take. It's not confirming anything. You have felt second entry short. Right here, felt second entry short. When I was watching this live, I had a different bar. I had a bar that is not full at the EMA. So I skipped. You cannot take felt second entry short when the bar is not at the EMA. Also, I had some stronger swing right here that allow me to draw a wider channel better. Here, there is no significant swing. So it looks like there's only tight uptrend working higher. If you risked it, I can mark it on this chart, but there's a tight channel with the breaking new high already. There is no broader swing that allows you to draw a wide channel, but on this chart it looks a little bit better. Before I reloaded my data, I had second entry short failure that is not full at EMA, and market continues working lower. So now I'm really questioning, hold on, what's going on? We're not reversing, a little bit unclear, downtrend played out, we're not going higher. So now I need more information to work with because price action is not clear. I want to wait for confirmed structure and key entry point. Now the structure is not confirmed. You're getting maybe some information that is a little bit bearish. Maybe you're playing with the idea that, hold on, there can be some wider channel like this, but you just had a breaking new low, second leg down, this can happen. So you can't really play this channel just yet. It's quite sideways. It's better to wait a little bit for more information on what the market does. You have a double trap, but once again, it's a little bit too sideways. And you have additional push down. Okay, so now because you have another push down and you created another lower low, now I have to draw and play the wider channel, something like this, because it really has a lot of confirmations off the top. Okay, additional push down, there's too many lower highs and low lows. Now I have to start thinking about selling. The structure is bearish, so now we as traders, we respect corrections and we're thinking about high probability setups. At the key entry point, you can see the downtrend evolve nicely. I have a new low here, first entry short, pull back, second entry short, right after EMA, great signal bar, great high probability setup, second entry short, the downtrend is in play, it's right at the EMA, short term option played out, and now you even have a lower high confirmation setup, confirming the second entry short, great tail, another rejection of the EMA, structure is still in a bearish trend, great high probability setup, bottom completely dropped, and we have overshoot. You have overshoot because we have break of the trend channel line. If you have a break of the trend line, we expect price action to eventually test the new extreme. If you have the break of the bottom line, which in downtrend is trend channel line, you expect right now stronger correction in the opposite direction. This is oversold area. We don't need any other indicator. We can just, based on reading pure candlesticks on a chart, pure price action, identify exactly if this is oversold area or not. Okay, indicators are crutches. If you're going to be relying on too many indicators, you will never develop the skill of reading the price action. And this is a skill. Reading the price action is like learning foreign language. It takes time. It takes years to learn. It gets easier with time. The more you immerse yourself in it, the more you learn it, the more you will develop your gut feeling. So make no mistake about this. This is a skill to learn to read this chart. You'll get used to this. And you can see that if you focus on pure candlesticks without indicators, all that is enough is just watching those bars, and you can tell this is oversold area. So expect stronger correction in the opposite direction because market needs to go back into equilibrium. So after overshoot, we always skip the very first second entry short or long at the EMA. Okay, there was none, but had there been, you still need to skip because overshoot can generate stronger correction in the opposite direction, and you simply need to respect the stronger bullish momentum. Break, push to new extreme. We actually had FOMC day today, so structure can be choppy and volatile, so you don't want to be trading right around the news. Breaking new high, push below the EMA like this. I like drawing a little bit wider channel. There's a tiny break. Now this downtrend needs to get new extreme. Okay, strong push below EMA. So I'm thinking about second entry short at the EMA. Is felt second entry long enough? Not really, because the significant push down already happened. Okay, you want to take felt second entry long, something like first entry long, second entry long failure. Okay, when the trap is about to happen and the push down is about to happen, every single time you can see the move down already happening like this. I'm no longer treating this as a felt second entry long, and rather I'm looking at this as a first entry short. Okay, so felt second entry long, you want to take it before the move happens. That's why it's a trap. But once the move down already happened and retrace all the way here, I'm treating this as a first entry short, and I need second entry short at this point because the correction can be a little bit longer. Can I get a second entry short? I was ready to go short here. No trigger, so there is no trade, no trigger below the signal bar. I cannot sell below this bar. Horrible signal bar right here. So I'm just being patient. Maybe a lower high if it's going to form, great. We're back above EMA. So now, okay, I'm pausing looking to go short because we were supposed to go test the new low here, and we're back above the EMA. So this is some information that the bulls are still active in the market, a little bit too choppy. So I'm basically taking my hands off the keyboard and mouse and just being patient here. Thing is, I cannot go long because it just doesn't make really sense. Downtrend is new low, uptrend played out. Okay, some broad double top, interesting, massive push below EMA. Okay, and we have lower high confirmation setup confirming the double top. Okay, once again, watching this live, the signal bar was terrible. Now after I reloaded my data, the signal bar is great. You can see how broad of a structure this is. This is really good sign for the sellers because there cannot simply be wider uptrend like this. You can use the trend channel line. You can see this doesn't make sense. This was like a one leg break, second leg up. This is too broad, especially since we traded down. So this is a decent high probability setup, lower high, confirming the double top, very broad structure, great signal bar. Can I get a failure? Now I want to see second entry short at the EMA. I really expect new low for this downtrend now. Now we retraced quite a lot of the downtrend, but you have to remember this was caused by the news, by the FOMC. So the push up was a little bit bigger than normal. There can be some residual bullish momentum. So FOMC just messed it up a little bit, but we still expect new low, or at least you're following this short-term downtrend at the very least. So you want to see right now mini second entry short at the EMA. You have to follow the short-term downtrend. Okay, massive push down. Now, even though the main channel has new low, I could still consider some textbook second entry at the EMA because this leg down was so significant. Big chance it's going to get new low as well. But it already created break new extreme without even correcting the EMA. So after this downtrend played out, I definitely now have to pause looking to go short because everything on the chart played out. Everything played out, all downtrends, the big one and this one, they have new extreme. So this means right now there is no bearish bias. I can't really buy at the bottom randomly willy-nilly like this. There's no key entry point or nothing. So just be patient. Let's see what's going to happen. I need right now some better structure, established structure. Can we get reversal? We're back below EMA, so this is quite confusing. So now I'm just watching price action develop. Okay, we're back up. I was thinking there can be some failed second entry low below EMA. I was looking at this as uptrend break new high, 2 legs up. This key level was going to hold, so I was thinking about failed second entry low below EMA. Lower high, it didn't trigger, but I don't think lower high is strong enough because you don't have no confirmed trend, no nothing. Even this key level is not really that confirmed. It looks like it's about to be some potential trend range, but it's just about to be established. So in a situation like this, I need failed second entry long because the key level at the top is not holding. At the bottom, no confirmations. It just looks like broad 2 legs up. So you don't want to bet on singular lower high. You kind of prefer failed second entry long. That never formed back above EMA. Okay, too bullish, too bearish. Okay, bounce here, back above EMA. It just whipsawing up and down, and now it's getting pretty much way too late. The market is about to close. There's no good setup here. The market is about to close. So this is the overall structure for today. We started with bullish trend working higher, followed by bearish trend down. Overshoot leads to stronger correction in the opposite direction, broad correction, push to new extreme, and then just sideways price action. It's tempting to go long at the bottom, but you have spike down without new extreme, so we can't really pull the trigger. Now, when I was watching this live, the signal bars were different, as I mentioned already. You actually had much better failed second entry short, which looking back, it was also mini second entry long. It was a little bit congested at the time, but since it is also mini second entry long, you could have considered on the different chart before reloading the data. I don't think still you can take this bar because there's overshoot. We talked about there was a break in new high. There will be no second entry short because I believe it was an inside bar on the primary chart before reloading the data, so there will be no setup. So a couple different setups here, but it's okay to go through the chart even with different signal bars because you still are learning the price action, how market works, because some of these setups are good, but the signal bar sometimes is bad, so you can't take it, but you still want to practice if the signal bar is good. So this is why we went through this. And even if I reload the data, the bars don't change. So for whatever reason, today my bars just were acting up differently. Nothing we can do. Important is context. This overrides everything. So important thing is if you can read the context, you have the key entry point. If the bar is a little bit different, it doesn't really matter too much in the end because sometimes you get better bars here, and you get worse bars there. So it will all even out in the end because you get better bars here, worse bars there, and better bar here and worse bar there as well. So all in all, the difference will be minimal. Today was FOMC announcement day, so just make sure you're not trading right around the news. There can be spike in volatility. But overall, looking at the chart, it doesn't really look that distorted and that bad as I initially expected. So actually the FOMC didn't really affect price action that much. It's pretty much still quite structured. I'm gonna wrap it up. I hope you had a good trading day, and I'm gonna talk to you next time. Good luck in your trading.